All right. Thanks. Hello, everyone, and welcome to the December Charlotte Investors Business Daily Meetup group. Thanks again for joining us live. It's always good to see some faces every month. So, welcome back. And we're going to talk about de-risking in December. If you were with us last month, we called that one the year-end sprint. And for us, we thought the sprint we were maybe getting a little bit gassed out, maybe sooner than we expected. So we'll talk about what we were seeing, what we are seeing, and why we took this time for a lot of these leading stocks to take some off and take profits because a lot of the times when you see these stocks, I'll go through a few examples. We'll see how they're going parabolic, they're blowing off, and you don't want to turn into a trader that changes from a short-term trader to a medium-term to a long-term trader as they come in, and you have to justify holding these things. So by taking some profits, it kind of eases the pressure. It makes that decision a little bit easier, just to reload um, when these stocks pull back. So we'll go through, again, just what we're looking at recently. But for just the background in case you're new, this is the Charlotte Investors Business Daily Meetup group. We have over 2,500 members here. We were based in Charlotte, but obviously now many of you aren't in Charlotte, and we've transitioned to Zoom over the years, and um, get to reach all these different people all across the country and world. And the whole point is just to discuss, educate, and foster that community of stock traders. So a lot of what we look at is based on How to Make Money in Stocks by William O'Neill. And we use the IBD, those Investors Business Daily resources heavily too to help us in our stock selection. So we'll, at the second half of this presentation, we'll go through a lot of that. And just the disclaimers, of course, we're here for educational purposes only. That's it. Talk to your financial advisor if you want to get financial advice. But we're here just to talk and inform and yeah, and do the best we can with you guys. But none of it's recommendations to do anything necessarily. But okay, so we'll talk about the um, we'll talk about this. Oh, sorry, I'm confused here. We're going to talk about this acronym, the CAN SLIM acronym. I mentioned that with the William O'Neill book. This is an acronym that he coined in the past. It talks about criteria that we're looking for to find these leading stocks in the market. So at your own leisure, feel free to look at this acronym more, but we're looking for new companies with, big earnings growth that are becoming institutional favorites. And importantly, we're also looking at the market direction, trying to determine the market overall direction, because that will help your odds. If you can determine if we're in a bull market or a bear market or uptrend or downtrend, that'll certainly help your odds when making decisions. And so for our process, we talk about this three-pillared process, technical analysis being first, fundamentals being second, and then macro being third. The technicals that can encompass a lot of things for us. It's mostly trend. You can talk about momentum things. We'll talk about mostly we'll talk about sentiment today, not as much breadth actually, but these are all things that are considered technical analysis, and the trend being the most important. And the reason why we put this first over fundamentals is because a lot of times this will tell you first. This is going to let you know that something in the fundamentals has changed. It can be the first thing, and it's quick to do screens for all these different for relative strength and different things like that to give you a hint that the fundamentals are improving for different stocks. And the fundamentals, we can sum it up in this acronym, like I mentioned. So, um, you can generally just look at earnings and revenue growth and, new industries. We'll talk, there's obviously a lot of new industries um, that are becoming more and more relevant, AI being the most obvious. This quantum computing thing could be interesting. That there was a big announcement apparently last week. Maybe someone is an expert on that, and or yesterday, and someone can help us understand that a little bit more. And so different things like that. There's nuclear. It's whatever. There's a lot of themes. So that's kind of in the new part of that acronym. And yeah, so we use again Investors Business Daily Resources a lot for screening for these fundamental things as well. And we won't touch on macro because right now for us we're looking at a what we think is a bull market. We're trying not to think of too many reasons to not be invested because that's kind of the macro is often the thing that scares people and keeps you out. So we're just going to continue to not focus on it for the time being. But I will touch on a few things that we consistently watch every month, just to kind of give a framework of how we're thinking. But for now, we're not going to let it scare us out. So with election cycle returns, I've been updating this because we knew we were kind of entering this stronger period, starting at the second half of last year, based on this cycle work. We're right here with where that arrow is. We've got a little bit left to go in the month. And we could have this year in rally. It's really unclear, but for us, we think the risks because of the moves in a lot of the leading stocks were so were perhaps getting exhausted. We took some off, but we could get one more move, consolidate for the start of next year, and then move higher based on this cycle work. So I'm going to go through a few of these stocks that we ended up selling because I feel like that's kind of the important thing. We're looking at the leaders. The leaders give you the clue first, right? So the leaders roll over and top before the index is top a lot of times when there's some kind of meaningful top in the market. So Reddit, that's an example of something that we sold yesterday. And again, that's just that parabolic move. You've got this earnings move, earnings drift from 110 to 180, right? A massive move there and extended on a lot of levels. Extended, what we're looking at a lot of times is how the stock price is relative to the 10-day, the 21-day, and the 50-day. And for us, those alarm bells have started to ring for a lot of these. And Reddit was one yesterday. And we're sitting here thinking, okay, we want to be long-term position traders, but at a certain point, when you see that you're about to give up 20%, $30 from the high to the 10-day, we find it, prudent when you see that level of extension to take some off, because obviously that's a very reasonable move to see in the stock. So this was a hint, I think, to lighten up. We're going to look at how price has been making higher highs and momentum could be waning here for some of these stocks as well. So that kind of gives you some hint to we might want to take a rest with some of these. And this the MACD down here being that momentum indicator I'm going to highlight. Another one was Palantir, same kind of idea, right? Going parabolic yesterday. It's been a leader. It's up 100% since basically the election, the day before the election, actually. And we find that level of extension again, like 45 or 50% above the 50-day moving average. Again, that was a key hint. It might be getting ahead of itself for this. And now we have these really nasty reversal bars that we think are meaningful and might not be breached until who knows, a couple months of consolidation. We'll see, but we found that these key reversal days are pretty meaningful and something to keep an eye on, especially as these stocks that we think were leaders and just got ahead of themselves. If they're going to be the leaders for the next bull market, those are important levels, right? You want to have alerts there for these stocks taking out those highs from yesterday. And the same thing we're going to see here with this MACD, this momentum indicator down here. We're just on the precipice of that sell signal. We most likely get it, tomorrow, regardless of where this stock goes. So, yeah, same idea. Take a break. Momentum can relax. Tesla, same thing. We think a leading stock. The stock has doubled almost up, I think about 90% from the lows here prior to the election. Actually, that was the election, but this is prior to earnings right here. So doubled in a couple months, massive stock. So, that's a what, $700 billion company going to a billion and a half, I think, in just a month. And okay, so you did get that sell signal temporarily on the Tesla MACD, back on a buy, but for us, price is still the more important thing here. DoorDash, this is one too, proactively just trying to take some off with seeing our bigger holdings sort of top and reverse. Just thought prudent to take some off there. You can see this has been on a momentum sell signal for a few weeks now, and we may still see that more consolidation happening here. And so app, not something we were involved in, but this is the type of move that we were seeing from a lot of things post-election, and it was things were very, very, very good for 4 weeks. Um, and this is just one of those examples. Again, we missed it. However, you see the elevated risk here when you're down 25% in just a couple days, because it's a good lesson. If you didn't sell into strength, you own some of these, it's hopefully a good lesson to take some off occasionally, and then you're just not feeling the pressure right here and sort of in no man's land. Like app is in no man's land. It looks like it needs time to have a lower volatility consolidation, but for now it's sort of a no touch. Maybe you get a reflex bounce, right? It hit the 21 day. As traders, we can look for those opportunities for sure to exit, but um, yeah, this one appears to need a rest. And again, that MACD momentum sell signal here, I think today just happened, and look at that. The level of overbought for all these things is at record level. So yeah, again, these were flashing signs. Okay, and lastly, we've got Bitcoin. I think lastly, for at least the things that we lightened up on, price is fine. It's consolidating. It's at the 21 day. It wasn't as elevated, right, above those moving averages as some of those stocks that we saw. But now it had that $100,000 headline, failed breakout and reversal. So it's a little unclear for us, a little less clear the path here. But now that 104,000 becomes such a big number, a big resistance number, and of course, as it makes new highs, it's got to cross through that first. So set that alert 104,000 too for this, because a lot of these things that we're selling into strength, we think, and we're the first out of the gate, are most likely leaders, but just require some rest. And you can see the MACD on that one. While we made a higher high in price, the MACD was on a sell. So there's that little negative divergence for now, where that's a little bit of a hint too, right? We talk about those things where price is making a higher high, but the momentum is not confirming it. That can be a little hint as well. So we've lightened the load here, and this is the IBD 50 index. So this is an index that's indicative of a lot of the stocks we're in. Just showing you how quickly things can change. 1, 2 days, it's pretty brutal if aren't managing those positions carefully. So yeah, just wanted to share that index. Overall, it looks like we're in this hopefully new uptrend. We've got the new regime of the new administration, and I'll talk a little bit maybe more about that later. But overall, hopefully positive for growth. But while we're seeing these stocks do these blow off moves, these parabolic moves, we're also noticing a little, the sentiment changes. We're noticing sentiment be pretty complacent, and so I just highlighted a couple of times we were at these meaningful lows in sentiment, or sorry, the meaningful lows mean lows in the put call ratio. So when this put call ratio is near that red line or below it, you're arguably a little bit complacent. And I highlighted the last four instances, right? And this was in July of 2024, July of 2023, and then December of 2021. where we were at these levels. And, it did start off some sort of meaningful leg down. Um, and yes, we've been hovering here now for about a month, but it feels like we've been playing with fire, right? Where you're trying to get the most out of these moves to the upside while knowing that you have this backdrop where you're maybe a little bit complacent. And the other argument here that where we could be wrong is you look at 2020, I don't know what changed necessarily structurally, but you saw that we could get well below this red line level in that strong 2020 and 2021 bull market. So, if we were wrong, that could happen, absolutely. But as of right now, the stocks aren't set up in the first place. So that's number one. And we are approaching that level. Okay, and this is another sentiment indicator we just wanted to point out. This is the National Association of Active Investment Managers, and it gives you this number down here gives you a long exposure for active managers. So we highlighted a couple times where we were at 100% or more long based on this survey data. And we found that, in the past, and we can't ignore these readings. In the past, this has been pretty accurate over the last 2 years, just to say things are getting frothy. So again, I pointed that just like the put call, we have this July top here with that high long reading, the 100% reading. We have December of 2024. We had not a horrible pullback here, but nonetheless a 1 week pullback. March, where that started a pretty ugly April, and then July, same thing, right, where we had this 100% reading, and then a pretty nasty couple weeks in August there. So, this is an indicator that we respect, and that's part of the reason for our decisions too. And so on the oscillator, right, we can say we sold off a couple days, we're nowhere near oversold. So maybe we get this oversold reading come in. This is that McClellan oscillator that we were talking about earlier. And so we want to see this thing come down to an oversold reading. We want to see those sentiment things correct a little bit. So we want to see a little bit of fear creep in while these indexes are oversold. Similarly, we've got this is the NASDAQ McClellan oscillator. So they're just slightly different because of the components that are included, just different stocks. But, it's in slightly positive territory. It's a very neutral reading. So we haven't had a whole lot of real damage under the surface yet. The indexes are holding up. Stocks, again, the leading stocks have been the ones that have really gotten hit hard the last week or so. But for now, we're nowhere near that oversold. We have not seen a whole lot of damage under the hood. But we are seeing some mega cap names sort of maybe take a little bit of a safety play. I'm not sure if people are anticipating any kind of pullback. But again, nothing here, neither oversold nor overbought on these oscillators. So that's kind of like, I guess that's the view on stocks, just, the stock environment. But I'm going to touch a little bit on macro too, just because we always do, and it's a part of our process. For us, so we have the CPI, I think, tomorrow. Generally, I think a benign report still 2.7% for November is the nowcast, and then 2.8% in December. For me, I'm just trying to think like just logically and simply about this. I don't want CPI to have any risk of going above 3% again, because that to me makes me question whether they've got it under control, whether we're going to have a re-acceleration that's meaningful. For now, it's 2.4 to 2.8 is not super meaningful. There's no room for perfect in the Fed's tools. Obviously, that's ridiculous. But I do want to see stay under 3, so we need to keep monitoring that and make sure there is control. One thing that's encouraging for inflation is hopefully oil stays a generally positive thing for inflation, right? If Trump's new administration comes in and they're going to clear regulations and they're going to, um, and they're going to encourage production of oil. That should keep a lid on oil prices and keep inflation down. On the other hand, we might see inflation pick up just because there's more business confidence. And, then you have to determine, okay, is that a bad thing even, right? So maybe the market tolerates 3% because it's just because of a, accelerating investment in the US or, deregulation is just encouraging growth. So that's the tricky part here. But for now, benign. I don't, I think that you look at that 3% level, you see a projection of like 3% in January, February, March. Then you got to wonder, okay, will the Fed do something different? So that's why I worry about 3% or something more. But as far as the leading index goes, this is what we look at for like GDP growth to kind of give us an idea. We're still not very positive. This level at that red line is where the leading economic index like signals fears of a recession, um, and it's a pretty good history of that. And really, in 2022, I think we've talked about this. There was a recession, so it was pretty accurate there. So we're still recovering in that. There's most likely upside that's not built in yet because it'll be interesting to see what November and December data shows. If there's an improvement, if that whole business optimism is real under a new administration, perhaps. Um, we'll see if that is a self-fulfilling prophecy, right? So that's the definitely the bullish case for the economy over the next 4 years. Yeah, and so with all that, we still all those inputs really come down to, and why we care too is because we care about what the Fed's going to do, and if we have an accommodative Fed, that's great. If we have a restrictive Fed, that just makes things tricky and choppy. Right now, the market's still saying they're going to be accommodative. We're going to get one more cut in December. So what, next week? Yep, next week we'll get that cut apparently. Unless the CPI report tomorrow changes anything, we'll see. But my concern, or the concern to be considering is what that means, everything for the out months, right? Are we really going to see this path of inflation or of Fed funds futures, right? Right now they're saying we get a couple more cuts throughout the year. I don't know if that's a guarantee at all, but we've seen that happen over, I think in 2020, gosh, now I guess in 2023, we stayed higher for longer than people expected. The Fed may not have to be accommodative if there is this just general business optimism and accelerated growth. It would actually be smart, I guess, for them to keep inflation low. But that's obviously what we just have to wrestle with. Is the Fed going to be restrictive, and will it matter if we have good GDP growth? I think probably not. I think the Fed can pause right here and hopefully, and I think the economy will stay the course. But in the meantime, we just need to be aware, okay, all these little events, I think, become more meaningful soon, right? Like I've kind of not cared so much about the Fed for the last 3, 4 months because it's kind of been clear what they were going to do. Inflation was good. Now it's creeping up. Now we're getting to a point where maybe we pause and, we just have to determine that and just trade the market that's in front of us, trade the setups that come up and just do the best to navigate that. Because most importantly, it's just been so good so fast that we need to be prepared for the other side of the trade. Um, Here's a look at the 1 year and 2 year treasury rates. This is just kind of directionally, it'll tell you what the market's thinking about the Fed funds too, just those really short-term rates. And here's the 10-year treasury, which we continue to monitor, just because it's the accelerator or whatever I call it, the carburetor of the economy. So, um, if this is going to stamp out any inflation that perks its head up again, we'll see. But For me, I don't know, directionless. You can see that annotated part where the Fed cut rates and perversely, rates rose quite a bit, and makes sense. They became accommodative, and long-term inflation expectations and long-term growth sort of increased right there, meaningfully. So that was just fascinating to see. But I have no real opinion about the 10-year. I think we're just trying to find that equilibrium where we can grow and not have super high inflation. Um, yep. And okay, the Qs actually not super overbought on this MACD momentum indicator, but just including it here, maybe we're getting that rollover. We'll see. There were some hints of distribution. Obviously, those stocks we talked about and many others. And then we did have a little bit of volume increase, I think, yesterday with that down day. So, a little bit of first signs of distribution, something to keep in mind there. And that's really it. Roy, do you have anything you wanted to comment on or whatever that I went through here?
Yeah, I can make one point, Wes, and that is regarding you got the Nasdaq up. What we want to be prepared for is like that July top, right there, that July top where we had that first big distribution day off the top, and then you had 1, 2, 3, 4 days later you broke, and that gave you your exit signal, which was very clear to reduce exposure. And
Hmm.
we see the markets, potentially rolling here. And if we would have a big distribution day in the next couple of days, I think you've got to be very careful. And you have two choices. You can either sell into strength or you can put in stops. And those are two decisions that are always hard to make. And it's really based on your personality. And it also depends on if you're trying to hold these stocks for longer term moves. And
And position size
in
also, right?
position size. Yeah.
Yeah.
So that's very important. So that's all that I have at this particular time,
Yeah.
Wes.
Yeah, and I'll just like quickly add the point of this is it's not to, again we're not harping on macro or anything to be bearish. We're bullish, but the fact is you just you see things like app, and if you're in app you get crushed, right? Even if the index is down 5%, like it maybe was here, and this was down 5% until it got the rug pulled from it for different reasons, but those stocks are just so volatile. You just have to, yeah, you've got to put in a stop and protect, what you've made on a lot of these things. And then, and not have FOMO, not have any emotion about this, and of try to avoid, we want to avoid even, trading in these environments right here. If that's what we're about to enter, hopefully we can have some patience to, all together just to avoid spinning the tires and pulling your hair out in these environments. And we're going to kind of go back to looking at things like the momentum. Keep it simple with the momentum indicators, going on sell signals or buy signals, and probably these moving averages as well, right? Like if we do roll over and the 10-day crosses below the 21-day and all that, the environment kind of changes as the trend is less clear. So, um, that's just, yeah, we'll continue to keep you updated on that, and just I think that's how we're looking at things.
And let me say, Wes, that based on our conversations and the way that we've approached the market and so forth, we're very bullish. We're still very bullish on the market. We think next year's going to be a great year. However, it could be quite choppy right in here. And this is sort of one of those just experienced tells that you see when you see the leading stocks peak and roll over. That typically, if when that typically happens, they come and get all of them. And they're we're very bullish. We're in this great 4 month seasonal period historically, which is very, very strong. We believe Trump's policies will be very pro market, cutting waste, increasing productivity, being pro crypto, reducing regulation. That's going to be very, very good for the market. And we think, the seasonality trend, we think that the seasonality from a historical basis, it's going to be very positive through mid-year next year. So the problem is you really don't have any great setups. Now you have many different strategies to implement in terms of trading the market. You can buy stocks that are oversold, and if you're a bottom fisher, you can do that, or you can buy stocks breaking out of sound bases. But we really don't have a lot of quality stocks that are breaking out of sound basis. They've already broken out. And the way that we looked at it was we thought that November 5th, November 4th, 5th, and 6th, that was your opportunity to put on size. And we went from being very, very lightly invested the day before the election to be 100% invested within 2 days. And all these stocks that we bought that day, like Palantir and RDRT, Reddit, and all these stocks have soared, and the setup's not there anymore. And so once the setup's not there anymore, you just have to have some type of technique and tactic to determine when you can take it off. And both of those stocks gave us two clear signals, because before the stocks gapped up pre-market and then turned hard, and we sold right into the gap ups. And we just thought that that technically these stocks were pretty much, as Wes said, they were gassed out. So normally when you have a blow off top like this in the leading stocks, it does take another earnings picture and an earnings report to reestablish itself into a new uptrend. So, these stocks, while you might be able to guess the bottom like tomorrow, the next day, and get a reflex rally, by no means is it a quote safe entry point. So it's a dangerous point. It's a dangerous time to be buying the stocks that have blown off to the upside, to buy those on the pullbacks. You've got to be very, very careful. And so we think that if the stocks are there, if they're setting up, the earnings are there, yes, certainly you can certainly buy them. We just don't see very many on our screen right now. We just need we need these stocks to set up again for us anyway. So just keep that in mind.
Yeah, and well, one more thing, I suppose, but you don't have to do this all or nothing either. But it's hard. I know people and me and everyone probably on here has watched the stock pull back and come in 20%, 25%, and you say, well, it doesn't matter. I'm a long-term holder. I'm in it for the long term, and you kind of get yourself stuck. But it can be helpful to take a little bit off, right? As you see these things happening, and maybe you're just emotionally, you're kind of, if you can be in tune emotionally too, where you're getting extremely giddy or anything, but it doesn't have to be all or nothing, right? So it can be healthy just to take some off, so you're not in that decision where you're saying, promising yourself, I'm in it for the long term, I'm in it for the long term, because nobody likes watching anything, correct 25%. That's all I
So
got.
are we ready to talk about individual stocks, Wes?
Oh,
Uh,
yeah, that's right. I didn't share that last slide just of stocks. Yeah, I mean that's it. That's all I got. Yeah, let's move on.
Any questions,
can I
guys, right here?
ca- can I ask a question? You guys don't like energy, but if you look at the XLE chart, it has made a very nice cup, or some could argue it has made a inverse head and shoulder pattern as well. It is making higher lows. So any outlook for the energy? It is not going down.
On XLE,
Energy and
Yes.
RG. Oh,
the energy spider.
Yeah, you had it right.
Yeah, yeah. We think. I mean, this is for us, the way that we would interpret this particular pattern would be it's very poor. It's got a relative strength of 49, and we find that most of the leaders that have great moves to the upside, they typically have 85 or above relative strength before they really break to new high territory. So, there clearly could be an oversold reflex bounce with something like this, but we're looking for the Palantirs of the world, the Reddits of the world, the AppLovins of the world, those stocks that get to new high territory with no overhead, and that's how they can run meaningfully. When you're looking at a chart pattern like the XLE, there's so much overhead there, and the macro background in terms of Trump's policies are going to certainly, drill, 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 baby, drill. That's going to be very disinflationary, and this is probably telling you that the price of oil is going to go down. That's how I would view
Yeah.
this chart right now.
And I think we've seen this before, and you're right. I mean, that's exactly, of course, what I'm thinking, right? Is the policy of increased supply puts downward pressure on oil price, and that's not good for these guys' bottom lines. And what you could see happen, and we've seen in the past is you get this price war of pushing oil down and down and down and down, right? Where Saudi Arabia wants to increase output too, because they want to temporarily cause pain to U.S. producers who have a higher cost basis and all that stuff. So, I'm not excited about the oil industry, but if it means downward pressure on inflation, that's great for everything else.
So you mentioned, Wesley, you mentioned like a 25% downturn. I'm assuming you're talking about maybe specific height, some of these techs that have run high.
Yeah.
That's not a general statement for the NASDAQ where there's an expectation of a 25%.
Yeah, totally. Just the stock area. I was thinking, app being probably the biggest 2-day move right now.
Yeah.
Comes to mind. And we didn't even participate in that, but that's what I mean. Yeah, because it's like, okay, great, I'm in it for the long term, but we have to be realistic. And I've been the biggest Palantir bull out there, and ridden it, but I couldn't stand it. I couldn't hold it up here even, because even though I don't want to miss it for the next 5 years, but I just can't tolerate the risk that's getting in there for that.
Can I please ask a question? All these leading stocks that we were talking about, are you going to be looking to get into them again once they set up, or you're going to take them off the radar for a while?
Yeah, well, when you look at AppLovin here, boy, this really, really looks parabolic. It's traveling from 82 to 400, and I doubt that we would trade this stock. It's just like when SMCI peaked, and when these stocks go vertical like this, that's you've got all the meat out of the watermelon. But we do think differently when we look at like Palantir and Reddit, that we think that they could set up again. But when you have a stock that looks like this, that's been this parabolic, rarely does it set up again within 13 weeks. So we would buy any of these stocks that set up, but the question that you're going to have to ask is it going to set up at the 21-day? Palantir and Reddit, you had this big reversal yesterday, and it wouldn't be surprising for us to come into the 21-day, which is on this is another 9.9%. And from the top, that was a 20% move from the top to the 21-day. That's why we looked at it from a measured approach, and that's why we sold into strength, because if a correction comes in the overall market in these leading stocks, they're going to go down to the 21-day more than likely. So that was our way of being very offensive in selling into strength, because we had big position sizes. So our position sizes were very, very large, and we wanted to sell when we could, not when we had to.
And
So
how do you How do you differentiate leading stock? Like these are the leading stock right now, but after the correction, they may not be the leading stock.
True.
So do
What?
you look at the RS ratings number,
Yeah.
IBD 50, or how do you select those?
Yeah, the leading stocks, when we refer to the leading stocks, we refer to the stocks that have the best fundamental backdrop that are technically sound, and they're typically making 52-week highs, or there was some kind of catalyst that, and the catalyst was institutional buying pressure. Like for example, Reddit, this was on their earnings report. The stock had had a major move up on its breakout on its earnings report, and they raised guidance significantly over the next year. But that's what got us into it. We actually bought the stock this day right there when it came in the third
Mhm.
day and then turned back up. That's when we bought it. But we bought it. It hit our screens because of the earnings release. So normally when you go back and you look and you study these stocks, like, and we're kind of in a market very similar to 2020, 2021, and you had all these stocks that broke out on big volume with big institutional volume increases and big price moves. And we owned a lot of these stocks, and you probably did as well, like Teladoc, Fastly, DocuSign, uh, uh, Zoom, and those were the leading stocks in 2020 and 2021. These were the leading stocks. These have been the leading stocks in this year. And so we're looking for institutional clues, volume clues. And so this needs to really put in a base of 4 to 6 weeks and then break out of that base for it to be really actionable. And so it's gonna take a while, I think, for these stocks to really set up again. But the question that that everyone's going to have to, the decision that you're going to have to make is, do you buy it at the 21 day? If the market rolls over tomorrow, the next couple of days, and you get a little scare, it's going to probably go to the 21 day, but it really needs to hold the 21 day. And stocks that are leading stocks that come into the 21 day, you can normally give them 2 days below the 21 day, but that's really where you need to put in the line in the sand to protect your downside. So the leading stocks typically hold 2 days below the 21 day, and that's it before they resume their uptrend. So keep that in mind in subsequent days, over the next 3 to 4 days.
Um, Roy, just two on that 21-day thing too, like Mr. MSTR, if you just want to look at that, kind of what we're talking about, that's already happened, right? Where it touched it real quick and you got that snapback. It's really not a good setup. Still, because it's all these things we're talking about are extended and all that, but you
Yeah,
do have that opportunity right there. And that's just the example of, this was the stock for the last
yeah.
2 months and what it looks like, right? So, um, again, not a great setup, but you might be able to get that trade and then consolidate for several more weeks.
And we
Uh,
did. Yeah, go ahead.
uh, Sorry, 21 day, you look at the EMA, not
Yes,
SMA.
yes.
Thank
And
you.
notice and see, and we have no crystal ball at all. Although I think Wesley does have a crystal ball, but
No.
literally that I gave him. But when these stocks go parabolic and then they reverse, it takes a long time. You can see how this set up. We actually tried this again for 2 days
Mhm. Yeah.
right there and sold it on this reversal where it looked like we were holding in at the 21 day and turning back up. And then we ended up selling the position right there. We thought that maybe to get a snapback rally and, potentially even make new highs. But now we think that this goose is cooked for a while here. So, when, ideally ideally look at the breakouts into into new high territory. It's going to be, we could have rotation into, many different stocks that aren't in the IBD 50 right now. And there could be a rotation from, any number of industries. And you just have to be aware and alert to those potential, character changes in the market. And you got to, watch the stocks that are up on big volume. That's how you can find them. And, you have all the tools that are necessary if you're using tools like market search. Let me see. Oh, I'll just pull out a few of these names that we've owned and we've talked about for ad nauseum. And this is why this is this is on an earnings report and they sold right into it. This is very unusual, and we were long this stock and sold it yesterday, taking that
It was
low
down
out
like
right there.
8%. Yeah. Yeah.
Taking the low out, the prior day low, and now the stock is broken. It's going to take you can clearly see that you're in this. You have these periods where you have this nice uptrend, then go parabolic, and so this is looking like a stage 3. According to Stan Weinstein, it's a stage 3 topping pattern. And, we were in this stock along with many other people that we really haven't traded it very, very well at all. But, when these stocks put in these topping patterns, you have to observe the action in the stock and be able to exit. So, you can see, that you just got to put your stops in to protect your downside. Like we recently owned this stock and we sold this stock we had a 10% profit going into it. And then it really disappointed us from an earnings perspective. But look at if you didn't sell it when it had a disappointing earnings report. And we carried some of that, like a 5% position into the quarter. And then, it's come unglued on no particular news, really. But you have to watch these clues, see the volume increases right here, the big volume increases. That's just the opposite that what you would expect with, in a sound position, in a sound stock, sound company. Let me see. We'll open the floor up. Any stocks that you guys are following that you're interested in that you want to take a look at?
Hey, Roy, do you mind looking at BAM? It's BAM. I tried to take out its high a few days ago and then reverse lower for the day. I've been trying to lighten too, but I'm actually thinking about buying this if it can get above.
This is really, just the group is very strong. And, in this group, and we'll go through a couple of the names that are in the group, but this has really got a very, this has got leadership, definitely characteristics. And, if this stock only broke out, a couple of months ago. And these leading stocks normally they can run a year and a half. The average winner for long-term winners from O'Neill's approach was about 104 weeks normally. And so this is, if we're in this very, very strong bull market, you can make the case that this is only halfway. It's only halfway achieved its objective based on what I'm seeing from a technical perspective. So this certainly looks interesting, and it's definitely leading. You got a relative strength there of 91, and it's basing. And see, this is the kind of once this this is what you would want in Palantir or Reddit or something like that. You'd like for it to just come in, hold at the 21 day. See, there's the pullback to the 21 day, a bounce off the 21 day, and then building out this right side. That's really what you want to see. So the idea that this stock is staying right here when you're seeing other growth stocks reverse down, that's strength that you should pay attention to.
I think
So
Apollo and some of the others are doing the same
yeah,
thing too.
yeah. Let's take a look at them. See, there's Apollo, and now you had this nasty bar. That's what Kava looked like. See right here, so that's not good. And this was the highest amount of volume in the base, so that's a negative clue right there. So you've got to be careful. If that's you got to be careful with that. If you start seeing more than one of these peak and turn down, it could be in a consolidation mode for
and
days to
Roy,
weeks.
that day the volume was high
Yeah,
based on it getting included in S&P,
yeah.
and it went to new highs and then reversed and fell down. So
Yeah, so I would avoid this stock right here just because of that. That's not what I want to see. Higher volume moving down. That's exactly the opposite of what a healthy situation looks like.
Hi, could you please look at Coinbase?
Yes. So this is an interesting potential winner here, and they had a great earnings report, and the stock moved up on the earnings report right there to tell you it's in play. This is we haven't bought it. We came very close to buying it in the last 4 to 5 days, but we did not pull the trigger because we've been in a sell mode over the last week. And so we sort of have suspended our buying window until we have better setups. But this is clearly establishing a base. It's not too far extended. It just broke out over 283. They have a great earnings quarter. There can certainly be a beneficiary of the legislation from Trump's policies. And he's got everyone that's in his cabinet is pro crypto, so that's very, very positive. So this is something I would definitely keep my eyes on and watch. But again, it needs to hold this 21 day. And so, if you don't want to see it fill in this, you don't want to see it fill in the gap. That would be too much on the downside. The leading stocks are going to just come to levels of support where you could clearly see there's significant support, which is in this case the 21 day. So you want it to hold here. If this stock would reverse tomorrow and say we have a favorable number, the market takes off, this would likely be an attractive candidate.
Have you looked at ALAB? I think you're holding it at one point.
Yeah, we sold it in our swing trading account yesterday, and we de-risked. We sold half of it in our core accounts yesterday, and the reason is because this is what we were looking at, and we think that this is one of our top potential stocks that we would want to get heavier in or buy it back. But your downside is right here. See, there's the downside where I have this alert. And that downside, so you have to ask yourself after a move, and normally when you get these earnings moves, normally you get a 20 to 30% move, and when you get a move like this, breakout on volume, and you can sell right into those from a swing trading perspective. And what we did not want to go through is it's 13.5% to the 21 day. So, and from the high, it was probably 17. I think it was 17 to 18%.
Yeah.
So
it's still holding the trend line though.
Yes, holding the trend line. It hasn't given you any obvious sell signal, but there's your downside. So this would be one, if this market rolls over, I would think that it would hold right there at the 21-day, and that's the opportunity that you're going to have potentially in some of these leading stocks, but you've got to pick your stocks. And but so if the market sells off and it comes into the 21-day support, it should hold, and that's where we would be interested in buying it. But you're not coming out of any base. You got this ascending base going on, and you're guessing right there that it would hold at the 21-day, and we have a lot of profits built up, so we'll probably try it. For a couple of these and see if they're holding. We'll test the market, so to speak.
Roy, the other problem with ALAB is it's a AI beneficiary because of NVIDIA, expected to go side by side with NVIDIA.
Yeah.
But if NVIDIA itself is suffering, and if all the hyperscalers are doing their own processors, and if the spending goes down, ALAB has to go down.
Yeah, we'll see. I mean, you could certainly be right. There's the breakout on earnings that they sold right into, and this is somewhat troubling. So you've got this has been the leading stock in the market for the last 2 years, clearly, and it's tough. It's tough. It's tough because the earnings projections moving forward are so enormous. And normally these leading stocks don't peak until the earnings peak. And, the earnings aren't close to peaking, but it just might need to go sideways and build a base. But, there could be negative news, and what you certainly don't want to see is, this stock to live below the 50-day and come into the 200-day and, ride it down like that. This is, if I own the position after the move yesterday and today, I would consider reducing my risk in it. But on the other hand, if this just bases out and then you can take out these pivots, then they're buyable again. I mean, you've got a nice base here, but so what you would look for is to add, taking that pivot point out, taking that pivot point out on the turn, and not guessing where the low is, but wait, let this stock base, and then, buy, taking out some of these pivots. But, it's a little bit troubling, but it was troubling right here too for a brief period of time, just for 3 or 4 days. And so that gave you an opportunity to reload. So it's troubling. There's nothing major, but it's if it lives below the 10-week and it's right here at the 10-week, that could be trouble. The next line of support is, you can see it's $120.
The one I saw was Roblox. It's been holding up pretty well.
Yeah, so we own Roblox. We own Roblox as well, and we did de-risk. We did de-risk, like we said, on all the same day as we did on these other stocks, and now this is holding up. This is holding up really nice, and the pattern right here is very attractive as well. So you've got some great earnings movement, great volume. The stock broke out on the earnings report, went a little higher, came in roughly to this 21-day, and then turned at the 21-day, broke out, took out 55.10. Now it's coming back to the breakout point. This is potentially actionable on a turn as well. So, you got great volume signatures, and but we did de-risk it. But this is one that's not, it has not gone parabolic, but it just needs to build a little base and then go again. So this remains on the top of our buy list as well.
A question here, Roy. So how would you buy this? Would you buy it like I bought it and I got shaken out on the 21 and I got picked out, and I tried to enter it back and when it was turning back up again.
Let me see.
47.95 range. That's where I got picked out.
Yeah, give me 1 second. I'm trying to. There's someone in the background. I'm going to try to mute them.
Oh, that'd be me.
Oh, that's you?
I'll mute myself.
Oh, okay. Yeah. So, if you're watching the stock, you had an opportunity. Let's just break it down. When the stock came in here back down to the 21-day, right in here that was an opportunity to buy it when you had a setup like that. And from a swing trading perspective, 50 to 60, you sell right into that. And that's pretty much what we did. But it's the 21-day on the 20, and you don't want it to go to the 21-day. The 21 days down another 9%. And that's why you got to be careful of them. When we were looking at it, 2 days ago when we de-risked, the 21-day was 14%. So, all of these stocks were, that we own anyway, were extended above their averages. And so we know that just in a normal little 3 to 5% correction, the FFTY was down 6%. So many stocks were down 10% in the last couple of days. So we didn't want to have a 10% drawdown potentially, and so that's why we just sold right into strength. And that's really based on just, I guess, my experience and talking and managing the risk with Wes.
Yeah.
But here, the 10-day, if it holds at the 10-day and then turns, that's going to tell you that it's a very strong situation. And when these leading stocks come in, the best ones only come in like 2 to 3 days in turn. They come in 2 to 3 days in turn. So, this could turn tomorrow. So, it's certainly not extended, as you look at it on the weekly and monthly, it's clearly in the stage 2 uptrend now. And it looks fairly constructive to me anyway.
Yeah, makes sense. Thank you. Yeah, it's so hard to sell sometimes, when you're sitting on a nice cushion.
Oh, it is.
But it's easy to buy, but hard to sell.
Oh, everyone, you get your adrenaline going and you want to buy. But the mistake is to buy, not, also not know where you're getting out. So that's, that's important to try to limit your loss, anywhere from, 3 to 8%. I think our average losses over time they're around 5%, I would guess. But when the market's running hot, then you're the way that it has been since the election, your hit ratio should increase, dramatically as well. And we've had this great move where where you could have moved the needle. We were on record saying that we thought that we'd have a 10%, we could have a 10% quarter, and we've already got almost a 20% quarter, in the last 6 weeks. So, and that, you just have to know when to take the pedal off the gas. So that's basically what we're doing. And any of these can work, this can turn tomorrow, but it's just this is real, it's real tight on the pullback. So, I think that a lot of these stocks, they're going to come back. And then there's a whole menu of stocks that you can also consider. And this is, for example, this is a stock that we bought. This was Elastic, which is a search company, and we got kicked out of this when it took out the low of that bar when it broke out on the earnings report. And so that's where our stop was. Our stop was right there, and we got kicked out of this. I think we got kicked out of this on the open this morning, I think.
That's right. And that's well, I know we were talking about a few of these, like Snow was the other one that looked a lot like this. And what was the other one?
PSTG, a lot of old popping up.
Yeah, we'll pull that up. That's great. That's a great one to look at as well. So, these stocks have overhead. They have overhead, but this will not be healthy if it goes to the 21 day. This is Snowflake. So, you had the attractive characteristic where it moved higher on volume, and we love to play these. We found that our biggest winners have been typically those where you had monstrous volume and the stock's up 20%, and then it continues to go up. And but we have not bought this one, but you don't want to see this take out the low of the first day breakout right there.
Roy, can you look at ATH?
Yeah. Someone mentioned. Let me mention this first. This PSTG. So this is also coming back into the base. Not great, but it broke out. But it's not the best situation, but this just might be representative of what we're seeing, where you're having these potential leading stocks roll over a little bit. But what I'm saying is that, the idea that it came in and it's taken out the low of the breakout day is not desirable. But it could, you had a great quarter and, the stock moved up. It's not extended. And if it turns up, if this stock turns up, you could buy it on the turn, and then you could press it, taking out that high, going, when it's going in your direction. That's the best way that I found that you play these high momentum stocks. Wait for it to turn, wait for it to bottom, see the turn, initiate a position, a partial position, whatever that might be for you. And then press it on the reversal. Press on the reversal, press it, taking out, these pivot points here.
Roy, could you have a look at Flowserve?
Yeah. This you gotta look at something like this and think that this might be where the money's gonna rotate. You had a big gap. I don't know what the gap was. It wasn't earnings. This was the earnings report there. There was some kind of news. You can clearly see.
Drill.
Pardon me?
Drill, baby, drill was on the election.
That could be, that's it probably. And, you've got a great chart. Look how it's holding the 21 day right here. And this is, I really like I like a setup that looks like this. So it's holding the 21 day. That's what you want to see. There's not a lot of selling, although that's a big selling bar right there 3 days ago when we had the first distribution day, in the market, from the top anyway. But the numbers are good. Earnings are going to be up 29% this year, 20% next year. It's in the sweet spot, $8 billion, and it's the company. I think this company is located in Charlotte, if I'm not mistaken. Or no, I'm thinking of SPX, I think. But
I was looking at just buying it on a new high. If it stays tight, as soon as it hits a new high, I would go in.
You got a nice base here, and if you since it's it's indecisive right here, the move. Let me see. Yeah, and it's indecisive right here off the 21-day. So if the stock takes that high out right there of 3 days ago, the high of 3 days ago, it's probably actionable right there as well. Right there. I mean, it's so close to the all-time high, which you would get it, just only points away.
Thanks, Roy.
Looks great. Looks really good. It would be something that we would definitely consider it.
Any thoughts on quantum computing type stocks?
Not really. RGTI. It's a hot area. There was a report that's on all the news services regarding Google developing a new chip called Willow. That is, I don't know how it's gonna be a super chip, supercomputer, and we don't. It's not gonna make. They're not gonna be able to monetize it anytime soon. But it's one of these themes. And it's hype. They don't, this company doesn't have any numbers or anything like that. It's just got the money that's flowing in to, a very speculative area. And again, this happens at the end of a move too. So we're seeing like leading stocks that are the stocks that we're looking at roll over. And we're seeing this, stocks like this that blow off to the upside, like a GameStop, something like that. And that normally happens at the end of a move before there's a digestion and consolidation. And, when you get stocks like this, I mean, this is a tiny stock, 1.2 billion. It could go to 50. This is all speculative money, but, it's more than likely it's going to come all the way back in wherever it peaks, and there's no way of knowing where their stock is going to peak. And there's a couple of names in the group that the day traders are getting involved with.
Yeah.
QU,
QUBT,
TM, Q. What's the symbol?
QUBT, is that quantum computing?
QUBT. See the same kind of move right here.
Yeah.
What about ASGS?
KFGS?
ASGS. Snowmobile or
AST Space Mobile.
AS
the
Space Mobile.
satellite company. Yeah.
We were very interested in this company, back here in the move, but the problem is SpaceX has a competing product that is better, and ASTS, they're not expected to generate any revenue for another year. So we think that it's probably it's gone through the romance phase. It's one of these stocks, that moved up based on signing the contracts with with T-Mobile and Verizon and all these all these other companies. But I think SpaceX has the best product, and they've got numbers. So it's kind of went through this romance phase, blow off phase. It needs to have some numbers, really. And this is also typically what happens when these stocks blow off to the upside. You can see the relative strength is 99, and while the stock is sold off 35% off the high, but the relative strength is still 99. So you must consider that where the stock has come from, not just based on the 99 relative strength ranking. This really isn't viable here. This isn't viable. Yeah, I do have an alert up here so that if by some reason it comes back and takes out, this high, then then it's going to be, the uptrend may resume. So it's very difficult to guess these stocks that are speculative when you guess the bottom, and they're very very difficult. This Tempest AI that has a world-class board, and they're involved in artificial intelligence and developing drugs and so forth. Scott Gottfried is on the board. They've got prior surgeon generals, other surgeon generals on the board. And but where's the stock going to bottom? So from 80 all the way down to 45, and you've got to be careful when you're buying these stocks that are where you're trying to guess the bottom.
Hey Roy, are you planning to trade Tesla?
Yeah, again, we sold Tesla. I think we sold Tesla yesterday or the day before, and yesterday we sold Tesla yesterday. Same kind of thing for de-risking. We're just de-risking. And coming off the election, we bought it. I think we must have bought it right here.
Well, we bought it after earnings too, so we had a little bit after earnings, which was that gap lower. Yeah, the gap up to the left there.
Right here.
Yeah, we bought it on that up on the earnings day, Dad.
Okay.
Right.
And then we added to it on November 5th when the election came.
Yeah.
So, and again, this is what we're sharing with you. We're just sharing with you like how we handle things, and this tactic certainly makes sense when you don't want to have a 10% drawdown, and all these stocks that look magnificent right now, they can easily have a 10%, 10 to 15% drawdown. And what we were concerned about is not giving, too much back, then, if this stock's just not viable. And, say we have a good number tomorrow and this stock can go from 400 to 450. There's very little overhead left. And it looks viable. This is one that we would definitely want to buy back, and for obvious reasons. But when this stock goes to new all-time high territory, this move is just getting started. So this has been a 3-year base, just a 3-year big base. It really changed character right there. That's where it changed character. And so there's much more upside, we believe, in Tesla. And, this is, as they come out with their robots and autonomous driving and so forth, and the numbers start increasing again, you might, this stock could easily be $1,000, a year, 2 years from now. But, it's just a matter of trying to navigate through these ups and downs. And again, the 21-day, and this is really the worst case situation when you look at all these, a number of these stocks we're looking at, they may stop at the 10-day, guys, but there's no way of knowing. And, there's no way of knowing if it's going to stop at the 10-day or the 21-day, but the 21-day, that's 14.4%. And so you have to ask yourself, or, if you have a big position here in Tesla, it would only be normal for it to come back to the 21-day. So are you willing to have that stock come in 15% and be perfectly, and that would be perfectly normal. And you certainly don't want to be selling there. That's the whole pro, the reason that we're, pro selling into strength right here is, if you have a big, if you have a 15% drawdown in your portfolio, you're going to be, you're going to be hitting the exit button right when you should be hitting the buy button.
Hey, Roy, can we look at small caps, IWM?
So we bought this. We bought the UWM. We bought the UWM, and we sold it. We came out of it yesterday, right there, and that was for us that day. That was an outside day to the downside, and it looked lower from right there. So this could be, if we have a rotation tomorrow into small and mid caps, and this turns up, if this turns up, see, it's right at the 21 day. If it takes out today's high tomorrow and then takes that bar out right there, it's game on. So, there's a good chance that we might just re-enter, but we want to protect the downside of, if we have if this market turns over, it goes to this alert, and that's the 50-day.
Okay.
And that's what that's what you have to be. And notice it's really come down to the 50-day a number of times. And so the way that we look at the 50 days, the 50-day is 3.6%, which, 3.6% is not, that's not 14. So, how we're definitely watching this. And, it tried to go here. It tried to go here, tried to go there and break out and go. And every time they've sold into it. But, if this reverses, that would be positive. And, there's an 80% chance the Feds can cut rates before we see CPI tomorrow and PPI the next day. But again, if they cut rates, that's going to be good for small caps. So you get a reversal there. This would be one of the first things that I would look at in terms of getting exposure that's not extended.
So, Roy, I mean, it's entirely possible that if the CPI numbers are good, it may gap up tomorrow morning, right?
Yeah.
At 8:20. So how do you enter? Will you just accept it and enter at a higher price?
No, it could. It's hard to say. We're not going. I don't see us buying. The three of the sides that we well, I don't see us buying really. Reddit or AppLovin or any of these stocks that we're talking about that we just sold, because you could gap up and they could sell right into it as well. I think you just have to be careful. If there aren't any great setups, if you have great setups and you can find great setups in bases, like for example, like this flow starter that we looked at. I mean, this is a really constructive base. So these are the kinds of opportunities that you should take advantage of, not by like, something like that, and you could, if you get, if you get a bounce, this bounce, and we don't short very much, but this is one of those things that you would, you would and should short the bounce in it. It's going to take, I think it's probably over on this one. Not so much in Palantir or Reddit, but, that's a clear key reversal day. That's a sell signal right there. So taking out today's high tomorrow, we're not going to, I doubt, we're going to let it go. It needs to have some kind of consolidation. Like, you had a little bit of a consolidation right here for about 2 weeks, a 2-week tight. So you need some kind of consolidation.
Hey, Roy and Wes, congratulations on the great year.
Hey, Dana, how are you?
Good, good.
Thank
Since
you.
we were talking about things hitting the 21-day moving average and maybe moving higher if we're getting a rotation of sorts, can you look at cyber, CYBR? I mean, Rubric did well. Maybe it's a rotation into those spaces. What do you think?
The groups, the group, it's an obvious great group that's got organic growth, but of course they have had their troubles with Palo Alto and CrowdStrike, with the CrowdStrike, and I think that was Delta, their fiasco. But okay, so these leading stocks right here, see, this is when you're looking at these leading stocks, it's come in 4 days, and it should hold. See where it's right below the 21 day right here, Dana?
Yep.
If it makes a higher low tomorrow and then turns, then this could be, this could be, this could be attractive. It's, it is choppy here, but, really what you want, obviously, you want a move like that. That's what you're looking for. You're looking for this kind of move, and it's so choppy in here that it's very difficult. But it should hold. It should hold. And if it goes to the 50 day, I wouldn't necessarily be that interested. You want these stocks to hold. The leading stocks, they hold at the 10 day. And at worst, they go to the 21 day when you go back and you study like AppLovin. And, this is it's got a history of really going through this 21 day, on a number of, on a number of occasions. But, it still looks very constructive. If it reverses here and takes this high out, maybe you have a move like over here that maybe we have a move like this until the next earnings report. So it would be something that I would be interested in.
Roy, what do you think about VRT?
VRT, yeah, this is a tough one too. And in this group, by the way, before I get to VRT, this is the Fortinet. So there's the Fortinet move. See, Fortinet looks a lot better than cyber. See, look, it's tighter. It's broken out to this high. See, this looks much more constructive. And you also have, see where it came into the 10 day here, just the 10 day. To me, this chart pattern is more attractive than cyber, just because it's tighter. You have these walls of blue where there's been a big accumulation. And what were we looking at? What was the other one?
VRT?
Yeah.
Palo Alto Network.
Oh yeah, Palo Alto. I'll just pull that up real quick, Palo, just so I can take a look at it. See, this is where they missed badly, and then you got this. It's come all the way back, choppy, tough, hard to trade, and just hard to trade. And who were we looking at before?
VRT?
Yeah, okay, VRT. Here we go. So this is just, and this is one that this was a big winner of ours like a year ago. And this is the move that you want. That's the AI move, and then it got really, really choppy and nasty. And everyone got kicked out. It came all the way back, crossed over its averages. And you have this somewhat, this nice little cup and handle right here where it broke out. And so, about 70% of the time, these breakouts of cup and handles, when they go up, they come back to the handle, like right here. And that happens to be the 50 day. But, here it just looks, it looks sort of like, sort of squirrely, like even a small, see, head and shoulders, the left shoulder, the head, the right shoulder. And I actually looked at this today, just to see, how it was setting up. it's this is it's not great. ANET looks better. ANET's the chart quote looks better, and you've got a $45 billion market cap here. And let me see what ANET is. So let's take a look at the chart and see if you can distinguish the difference. See, there's a subtle difference here where this ANET looks better. You've got this really base on top of this base, this little cap formation here. And this looks more interesting. More interesting right here. So this money could flow back into this area, of course. And of course this liquid cooling for AI servers, it's very important for AI.
Roy, can you please take a look at Rubrik, which is same FT&T and same category?
Yeah, no, this is one that we do not own, and we there's these earnings cycles have been so hit or miss, and like from a swings trading perspective, rarely do I ever hold a stock into the number. Rarely. And it just seems like half of them work, and they're all looking good before the number. If you're in the leading stocks, they're going to look good before the earnings come out, but you just have no idea what's going to be viewed positively and what is going to be viewed negatively. Anyway, this is in the security area. It's an IPO, and we like new merchandise. I really like new merchandise, and this is a security company that broke out to new highs, and then the stock had much accumulation going into the quarter, and then you had this massive move here on the breakout, and this has got our attention. So you don't want to see it. You do not want to see it. We've shown you a couple of examples where these stocks like Snowflake and ESTC, they came back in and to the 10-day, and you don't want this stock to come all the way back up here to the 10-day in the next few days. You want it to not take out the low, the opening bar low of when it broke out. So you can see the hesitation. You can see where it's closed today at the bottom end of the range. But it just needs a few more days. It needs a few more days to have some type of base that's actionable. So we're very constructive on this company. We're not in it, but we're going to watch to see what happens in the next 4 to 5 10 days to see if it holds here, to see if it comes in and turns. This is something that because of the big breakout in volume, it's got our attention.
Mm-hmm. Hey Roy, can we look at a microcap, BARK, BARK? It's a turnaround play. It's led by the founder. He actually gave the reins to somebody else and came back to the company about 2 years ago. And he has been doing a lot of things, improving the business, improving the fundamentals of the company. So I mean, it's entirely possible it double, triple from here.
Yeah.
I just wanted to get your opinion on that.
It's been, obviously the stock got slaughtered.
Yeah.
20 all the way to 80 cents, 60 cents.
Yeah.
And now it's coming back. And of course that's, when you have stem winders that run the companies, leave, and then they come back, many times they can re-energize the organization. So it's definitely under accumulation here, but we would rarely buy a $2 stock, and it doesn't trade enough. It's only trading a couple of $1 million a day in tradable volume. it's not liquid enough. So it's not liquid enough for the institutions to find it. It's a tiny stock, tiny company, but companies like this, if they execute, if they execute, it's the stocks. It has to go to $10 to $20, and which is before institutions would get involved, and volume's got to come in and things like that. But I would say it's a speculative situation that looks okay technically on the chart. Another stock that we've recently written about, and also we bought, was this SoundHound, and they signed. You can go to soundhound.com and take a look at all their products. But we actually sold this today, and we bought it. We bought this stock right there on the reversal based on the volume breakout. And we think the total addressable market for this company is like enormous. And so I would watch this. And the reason that we sold it is we had, we had thousands of shares, if not a few 100,000 shares. And we didn't want it, a normal pullback takes you to the 10-day, which is 20% from the close. So we didn't, that's the 10-day. So this is one that we're very interested in. And you can see revenues they're up almost 100% quarter over quarter. See 13 million to 25 million. It's a $5.3 billion company, and it's trading huge volume. See, look at the volume. It's traded 89 million shares today. So you want to go where the institutions are going, and this was also heavily shorted as well. And we're going to watch this to see if it sets up. Some of these, some of the best winning stocks only come into the 5-day, and so that's going to be interesting to see where that is. But we ended up selling it today and booking the 40% gains in it.
Hey, Roy, question.
Yeah.
Given this stock has a high ADR, how do you put your stop around that? Like, for example, like it moves, I think like 10-15% in a day.
Well, we didn't. We were basically using a 1-bar stop once we bought it. Like when we bought it, we were using the stop of that day. That's when we bought it. So that's part. Once you have an ideal execution, and it's acting right, you just move your stop up. So we moved it up from right there. We moved it up right there that day to the low of this day. Then we moved it to that day because we didn't know if it was going to come into back to 12 after this 30-40% move. And here I actually had a stop at today's low. So I moved it up to today's low because and primarily because we're concerned about this market and about the leaders rolling. And that's just from an experience standpoint. Let me take a look here to see on the 10-minute chart. Yeah, see, we got kicked out when they took out the day's low. We had our low, our stop right there. That's what we did. And so we got kicked out right there. And that was this afternoon. And so there was just, we just wanted to, again, de-risk everything that we had profits in. And we bought it right here and, sold it right there and made 40%. So we just wanted that was just kind of a little gift. So we're not looking at the average, trading range in it. It's more of just looking at where it is with respect to the averages. And, if it gets tighter, that average trading range, of course, it's going to narrow, which would be better, but it's just, this is just the way that we, the way that we looked at it, somewhat objectively and just said, hey, this is where, if it takes out today's low, it's going to probably take out the low of the day before, and which was 13. And we didn't want to lose 10% in profit just by waiting until it took out the prior day's low right there. So that's why we exited this. If this holds in right here, if this holds in and makes a higher low or gets tight, has an inside day or something like that, I think this is setting up for, being a potential leading stock moving forward. You've got this is really known as a high tight flag, where the stock's doubled in the course of within 4 weeks. So it's a high tight flag, and it's putting in that flag. What you would like to see is this stock just trade like here and then go, take out this range. And then, if it comes in and it gets inside, what you would do, the way that we're approaching it from a tactical standpoint, is you could buy, taking out, a short consolidation and then press it going into new high territory right there. But but with the volume that it's showing you, the institutions are buying it, and the idea that the total addressable market is the whole world. This is very interesting. They're in Vizio TVs with Walmart. They're in call centers. They're in restaurants like Chipotle and things like that. It's seems like a great business opportunity. So keep your eyes peeled on this. Obviously, it's a speculative situation, but you could turn around and this could be a $30 stock, in 6 months from now as well. But this is the institutional footprint and signature that you want to see. And see, you're buying something, with very, very strong relative strength going up, not something that with poor relative strength that's going down.
And Roy, there are some stocks, for most of the people, if they sell or take profits, they'll have to pay obviously income tax on the profits. This year, the profits have been so high that many people could be hit with AMT. And the other consideration to have is, because they are not traders like you, is that they should consider the effects of a wash sale. Because this thing in a few weeks it could start its trend higher, and then that wash sale will apply. So all these are considerations for folks.
It's never been a consideration of mine in 37 years. So I just, if they're wash sales, you've got to deal with it, and you just pay the taxes. And again, if we were so interested in managing the taxes, we would have held all these stocks that were up, like Palantir, that were up, 50% in. But we're more concerned with just managing it properly, and let the taxes will take care of themselves. I mean, you'll end up paying the taxes. That's never been something that it's been important to me over the last 3 decades.
Oh, right. Not to you, because you have a special trading status, but for folks who don't. The other thing is, this one is a very special IPO. It's one of those few IPOs that I don't know. I think O'Neill used to call them with a particular name. Sorry?
Yeah.
These are the ones that really, really can be huge multi-baggers.
This is the idea of the IPO, and that it's come all the way back. See, that's very attractive, and you hit it exactly right. So it's not, don't think about where it went. It went from, 20 all the way down to, 1 as well. And just, the question is, where's it going? And when these stocks break out of multi-year bases like this, Eric Wish, is known for that term Greenline breakouts that Richard Mogulin has talked about it before. When these stocks get into all-time high territory, that's when they can really go. That's why, for example, that's why we're so strong on this A-Lab. See, this A-Lab just broke into all-time high territory in the last 30 days.
Exactly.
And so this is a very, very powerful situation. And that's got the same look.
Same signature, yes. That's all I wanted to say. Thank you.
You're welcome. And look at this example. See, look at when VRT had that Greenline breakout. It got to all-time high territory. And then then the stock went from 330 to 150, and that's what can happen when these stocks correct, come back and make new highs after they get through that, that transition period when it's going into new high territory. So these are the types of stocks, the pattern that you should look for follow through, buying. It's, particularly the stocks that are in all-time high territory. And that's what we're going to be spending a lot of time going over. And see, that's why we're so bullish on Palantir. See, there's Palantir. We just think it's gotten ahead of itself and it just needs to, consolidate, a couple of weeks, 2-week tight, 3-week tight, or something like that. Just hold in here and then go again. But this is a very, very strong, powerful chart. And this is something you should be looking at. Greenline breakouts, all-time highs, not just 52-week highs, but all-time highs. The leaders of the market in the next 6 months, they're going to be making all-time highs in price. They're not going to be the stocks that are underperforming. They're going to be making all-time highs in price.
Exactly. These are the stocks to invest more and more in and consolidate rather than diversify and look at.
Yes, but just wait. Sometimes you have to wait, and you've got to wait until they set up and then play them properly. And that's why, that's why if Palantir comes in, if it comes in, it's going to probably be bought right there at the 21-day. Probably will be. We'll probably start nibbling right there, but we're going to want to average into it, and we want it to hold above the 21-day or put a stop in 2 days below the 21-day. That's as much as we're willing to let it go. So you really have support at 60 on this. You got to really support at 60.
And I believe that happened with comp of 99, anything above 95, not RS but comp, and SMRA. These are special stocks.
Yes. 99 deposit.
Can I ask you a question from the historical prospect? What was your investing style from 2000 to 2007 when many value stocks were outperforming than the growth ones?
It's very hard for me to remember. Somehow I survived. You had two of the ugliest bear markets, in history. Really, two generational bear markets. In 2000 to 2003, the Nasdaq dropped 78%, and somehow I survived. But it was not necessarily value stocks, but we were still buying the stocks making new highs in price. And you certainly get whipped around a lot when the market's not in your favor, but when it's difficult, I think probably I lost 8% a year for for 2 straight years before I turned it around. That's sort of what I remember. But then once you put the bottom in, then we had really big years after when the bear market was over. But when you get into a bear market that lasts multiple years, you just try to not lose money. But the money that you make, I remember playing the Chinese stocks. I think in 2003, there was one of the first groups coming out of the bear market. Like they had SINA, NetEase, and a few other stocks, and I distinctly remember getting doubles out of those. But I'm not really value oriented. So I don't really care what the PE is, but I do care about the earnings, and also, is the stock technically strong? So, I'm looking at the stocks, not necessarily, how cheap the stock is, because, growth stocks are never cheap, really. When they're going through their great, phase, and many growth stocks aren't making money either because they're putting the money into the business. So you just have to make a value judgment and decision. CanSlim, it's meant to be used as to enhance the way that you look at things, and it's not an exact science, and you just pick up things along the way, and then you adopt these things and adapt and put them in your toolbox, and use everything. You should never use just one specific approach, and I'm going to only do this, and that's all that I'm going to do. But if you what I have found and is that the new high list, that's your best buy list.
Hey Roy, can we take a look at CRDO, please?
Yeah. So this is one that we haven't traded this well. And again, this is another one of these stocks that broke out. And see, this isn't good action taking out that low. No, it may work, but you're seeing this. I mean, all these stocks that we're looking at, you guys are looking at a number of the same stocks that we're looking at as well, but that's not good action taking out the low of the breakout day right there. And we haven't had good. In fact, this is the biggest loser that I had personally in my own account in 2023, where right here, and this is right here, it dropped 50% overnight. They only have a small group of clients, and one of their clients left, and the stock plummeted overnight. That's so obviously I don't have a good taste in my mouth, but I am watching it, come back. So let me see. Let me change the date. So it's on a watch list for me, and when you
if you
take a
see
look at it,
if you see their earnings growth, Roy, they are pivoting into AI hyperscaler data center play.
Yeah.
So that's where, but obviously I can see, I think last 3 days, a lot of these companies that made over 100% this year have been giving back in this pullback. So it may be good to come back maybe at a much lower point, because the earnings are there.
Yeah, again, no, you certainly don't want it to go. I mean, I didn't like the idea that it undercut there, but with the market environment right here, it may just undercut and then take off from here. So, you had that earning, you had the big breakout on volume. So, it's on our watch list, but just because the stock takes out today's high tomorrow, that doesn't mean that it's a really good buy. It just needs to go sideways and build a base. You just need time. It just needs to go sideways and build a base.
The way you brag about it.
Pardon me? but it is a potential candidate, and it's definitely a potential candidate. I would definitely have it on my watch list.
Roy, are you looking at Chinese names? There is talk of substantial stimulus coming from China over the next couple of days.
I actually bought this stock 2 days ago, and it's a Chinese stock that Goldman Sachs brought them public. They did the IPO, and it's a speculative situation. So I bought the turn. I happened to be watching it right there, and I bought it there, and I came out of the position today. I just sold right into it. But this is the only one. I mean, all these, I just wasn't happy, with the action in all these, today when you had the big gap up yesterday and then coming in today, and they all did this, FUTU.
And just
So
to
they
be clear
all,
on that pony, that was your play money, right? Because it's not a very serious idea. It's more right.
Yeah.
Yeah.
And it would be rare for us to buy this as well. This was just a speculative 2-day trade. Like, you could scalp it for $2 and, make a little money, so. But yeah, so we're not, so to answer your question, we've been burned so many times. I mean, we just burned so many times in China.
Mm-hmm.
And that we're, with the political situation, it's why bother?
Mm-hmm.
All right.
Hey,
I'm thinking of it just as a trade, nothing beyond that. Because, China is uninvestable.
Yeah. I mean, a gap, move, gaps up and gaps down. That's not, I can't trade them.
Okay, fair enough. Yeah.
Roy?
Yes.
What do you say about ASTS?
ASTS?
I know it's not breakout, but
we covered this one earlier. This one, ASTS?
Yeah, I just came. Sorry.
Oh, okay. It's really an avoid. It's an avoid. The numbers aren't. They're not. The numbers aren't coming until next year. Next year, or the year following that, they have placed, I think, a number of satellites, but they've got their work cut out, and they've got competition from SpaceX that's going to eat them alive, probably.
Yeah. In the chat, I listed some of the reasons, some of the challenges with this idea. And like you said, I mean, they need at least 60 satellites to cover the hemisphere, and they have only launched 5 so far.
That's what I thought. Yeah.
And so they will need at least $1 billion in funding to complete their constellation. And they only have $300 million on hand. And of course, they're burning cash. So that means they will end up raising a lot of capital in coming years. There is no revenue until 27. And on top of it, they're not selling directly to consumers. They're distributing their service via AT&T and Verizon's of the world. And they're so big compared to ASTS. So there is no way ASTS will have any negotiating leverage with those big guys. And like you said, I mean, competition is going to be very big. So, I mean, I would stay away from now, but it's definitely something to keep an eye on.
Yeah, great point.
Can we look at him? What about Rocket Lab in the same space?
What's that?
Rocket Lab RKLB is.
It's sort of one. It's they do have some numbers here. They do have some numbers, and so this it's the stocks moved up because of obviously pro Trump, and but this is a parabolic move, and the end of when you have these ants, this is when it's up like 12 out of 15 days on higher volume. volume's got to be up like 20% higher than normal over that course, 15 days. And many times that signifies a short-term top. And see, that's not really, that looks like parabolic, the key reversal. So, for me, this is an avoid. It's going from 5 to 25. It needs to base out for weeks, and then it can potentially go again. But when you get moves like this, these excessive moves right here, it was certainly a sell, in the last week.
What do you like these days in the financials and the industrials?
I guess in the financials, in the financials, the IWM's got a lot of financials in the group. So in the financials, rather than I like Goldman Sachs. I like Goldman Sachs. We like Robinhood an awful lot, which is a financial, in the brokerage area. So we're watching this to see, okay, what happens here? Is it going to hit the 21-day, tomorrow and build a base out? We actually sold this right there after the earnings report and and sold it like making like 1 or 2% because the earnings report was so bad, and then it proceeded to double on us without us being there. Those things, certainly happen. So we like, Robinhood. We like IBKR. But after these moves here, it just needs some rest. They just need to go sideways. And see, this is the example that I'm telling you about the second day below the 21-day. See, this should hold right here. And stocks that move from normally stage 2 uptrends, they normally come back to the 21-day multiple times. But we found that when you violate the 21-day and it closes below the 21-day 2 times, that second day, in many cases, you need to put a stop in right there. So this is right at a crucial area where it could bounce tomorrow and see it's down, $18 from the high. So this is one that we like. We just want to see how it handles, the pullback. And so that's who we would favor in the financial area. And and industrials, it would be we just have to take a look at like things like Quanta Services, PWR, where this is pulled back now to the 50-day, really a blue chip, stock. And the strongest performers, they're not going to break the 21-day. They're going to stay above the 21-day, and here it's rolled over, and now it's at the 50-day. So that's what we have to contend with. That's what we have to contend with right now, and in the market. But power. Let me see, MTZ. See, this looks, if you're infrastructure to build out, so forth, all that looks promising. ITRI, meter company, Itron, that's coming in. This is the industrial company that's coming into the 50-day right here. It broke out on the earnings report. Right there, Badge Meter, which is an industrial. That's breakout. So this is an industrial meter company that's got my attention. Industrial company. Now this is what with the looking at VRT and ANET. This is what's going to be interesting here. So this is the energy play, right, for AI, and the two big players there are VST and GEV, and we've owned both of them, and we don't own, of course, either one of them now. But wait and watch to see what happens here. We know that, everyone's on record saying that, energy consumption is going to be, AI is going to represent 75% of all energy consumption in the US, 5 years from now. So, they're going to have to, build the utility infrastructure out. And I don't think this is over, but it's gotten choppy here. So this is one that I would be interested in watching. And GEV was down after market on their investor day. So it looks like this might go to the 50-day, in the next couple of days. So that's an industrials company that I'd keep my eyes on. They're in everything as well, from improving the grid to have a nuclear operations and just normal operations in the utility area. This has been a big winner, and it looks like it's sort of potentially rolling over right here as well. See, this is just what we're seeing. We're just seeing a number of this rolling over action, and it may not be the end. It may not be the end of a move like in Palantir and Reddit and these stocks, but they just need time. So they just need time just to make a little base like this, and you want them to hold. See, GEV. See, that's the second day through the 21 day. See, today and now. See, it's breaking. See, it's down 859. So you're breaking that second day low of the 21 day. And that's a really good rule of thumb to be aware of when you're managing your positions very tightly.
Roy, what do you think of Constellation Energy compared to those other two?
This looks worse. It's living below the 50-day. And so you had a really negative report, and that was on the earnings report. It looked great. And this is when Constellation announced the deal with Microsoft right there. And so, clearly you had some, in this area, you had a lot of enthusiasm. Same thing that you're going, that's your experience with quantum computing right now, but it didn't last and it rolled over. There's the earnings report, very disappointing. And, they're not going to make money from the 3 Mile Island deal with Microsoft for 3 years. So it was bid up on a project that's going to take them 3 years to finish, to upgrade, and they're not going to see any money from it for 3 years. It was the animal spirits in the market, just the speculation running awry. And, in that group, of course, you had NNE that moved up, that's a nuclear option, along with OKLO in that area as well. But, this was all hype, no numbers, no meat. See, look, no numbers. But, you have Sam Altman that is the founder of this company, who's, founded, OpenAI. But no numbers. So no numbers, and it's going to take it's going to probably just very too choppy to trade.
Yeah,
MIR.
Wait, can you please check Clavio and sorry.
Yeah, let me get that. MIR, you said?
Yeah, it's some of those Greenline breakouts. It's also involved in the nuclear.
Yeah, this is look at the volume here. This would be this is the idea. I would look at ideas like this. 4.1 billion market cap, and you do have what I like about this that you don't have with NNE and OKLO is this company is doing $1 billion in revenues. And it's not that, quote, expensive at a 4 price to sales, and it's in new high territory. So these are the kinds of things that you're going to want to look at and watch, coming out of this correction as a potential rotation may take place.
If you look at it on the monthly, it's got the green line too.
Yep. Yep. This is exactly what you want to look for, like this. So, when I see, when you get ideas like this, just, jot them down, write them down. I mean, I'll probably be looking at this, stuff like this tonight. And again, that flow serve was brought up, which is interesting as well.
Roy, when you do the all-time high, do you look at the top of the high of the day or the week, or the close?
The all-time high. That as soon as it hits an all-time high territory, and again, I mentioned Eric Wish. He's done some work on this, and he studied a number of these stocks like Cisco in the 1990s and Google, and when these stocks when they on the monthly, when they break into all-time high territory, and then they consolidate for 2 months, and then the third month, that's when you buy that breakout when they're in all-time high territory. So that's they reset themselves. So write that name down, Eric Wish, and you can find him on the web. And he talks. He's got some YouTube videos out there that I found very interesting. And intuitively, I've known that for years and years, but he actually did some work on it, and I found it interesting.
Is that W-I-S-H?
Yes, E-R-I-C, Eric Wish, W-I-S-H. He's a professor.
Thank you.
And Richard Moglen has interviewed him probably a few times.
Hey, Roy.
Can you please check Klaviyo and Spotify?
Yes.
Thank you.
K-L-V-O, right?
K-V-Y-O.
K-V-Y-O.
Yeah.
Okay, this is right there. You can see on the monthly, there's your Greenline breakout right there. Oops, get my... Try to draw this. Daily and okay, software as a service, marketing, $10 billion company. They're doing $1 billion. You've got the Greenline breakout, it's very close anyway at 40. So you do have it. So it recently broke out. It's but this isn't great, the reaction to the earnings report, but it dropped on the earnings report 30%. And so when I get fooled on something like that, it typically takes a while for me to trust the company again. Dropped 16% on the earnings report, but it has come, to its credit, it has come all the way back, and now it's building a little base here. So
does it show strength, like it fall down, but it came back up and all the way up?
Yes. Yes. So, most of these don't, when you get a break like that, they don't come back. Mm-hmm. But this, the idea that this is, that this has asserted itself, pretty quickly is impressive. So, no one knows about this stock. No one's heard about it. Very few people. Let me see if institutions are involved.
So I know someone who works in this company.
Yeah.
And the only thing I hear from him is always like, oh, this is such a great company. Management is so good. He never talks about his stock and all. And they have they are not allowed to talk. But he always prays about companies, very satisfied there. And management team are, I think, one of the guys from or maybe a couple of guys, founder team are from MIT, and very like well-run company, kind of looks like.
That's very impressive. And the idea that it's come back, that gets my attention. What you told me intrigues me. The idea that that it is profitable, and the relative strengths, above 90, and it's built. If it builds this base here, and plus this is what got my attention too. Look, you've got some A+ funds in it.
Yeah. And sale growth is like 39, 35, 35, 34% quarter by quarter.
Yeah, so I mean, they're very strong numbers. Yeah, so this is definitely the kind of idea as well that could you get a rotation out of whoever big cap tech and move into if you have a small cap, if we have a small cap window, if we think the window is open, which we tend to think that the window is open now for small cap, and that we're going to get the rotation. These are the kind of companies that are going to assume leadership more than likely. These smaller cap names that you guys have actually mentioned.
Yeah. So Braze, BRZA, is a competitor to Klaviyo, and Braze is more focusing on enterprise companies, but Klaviyo is more on small and medium-sized businesses. So
what's the symbol there?
BRZE.
Okay, that's not B.
Zebra.
Zebra.
Z for zebra.
BRZE.
Zebra, I think.
He's saying Z for zebra.
BRZE?
Yeah.
Yeah, BRZ as in zebra.
Yeah. This has got very poor technical action, 38 relative strength.
Wow.
So the other is much more would be a candidate. This is very poor technicals on this company at this present time.
Okay. Roy, can you look at the institution?
One of the competitors in this space in email marketing that did very well was Zeta, Z-E-T-A.
Oh yeah. Oh yeah.
And then they got killed by a short report.
Yeah.
I think Hindenburg report. So
yeah, that's right.
It has been doing all-time highs.
Yeah. I think, Amit, you had mentioned this stock before too. I think in prior meetings, if I'm not mistaken. And
Correct.
I didn't know much. Correct. I didn't know much about it, but I was aware of this move from there to there, and then again the Hindenburg omen, that just trounced them. And and this is one of those cases where when something like that hits, you sell first and ask questions later. The quicker that you can get out.
Exactly.
When you see something down, if you see something down like 15 or 20%, and it's gonna be down probably before the news hits, and it's best in a situation like this is to sell it and then come back to it and buy it back if it in fact holds up. But that's the downside. It dropped 50% in 2 days.
Exactly.
So, and the way that you catch those, you catch it, pre-market. You look at to see what's up or down on the most volume pre-market, and that'll give you clues. I always look at that on FinViz every day to get an idea to make sure that we're not going to get surprised by anything. So that's very important to look at pre-market and aftermarket, aftermarket quotes to see who are the big movers aftermarket.
Roy, can we look midnight?
MGNI.
Yeah.
This is a stock that I owned a few years ago, back in 2020, I think, and they bought their number one competitor, and but the stock 92 relative strength, they're making money. Interesting. This looks interesting. Yep. So this is it passes the smell test. It's close to making a 50. It's making a 52-week high. It's it is a turnaround situation, but you had clear volume come into it on the earnings report, and this looks this would be something that would be on my watch report. I'm gonna put it on my focus list right here. Yep.
So you don't care about the DCR?
Pardon me?
You don't care about the DCR, the daily closing rate or something, whatever that is. Ratio is closing by to the end.
Yeah, I mean it's again the 21 day is where you'll find out if it's got support or not. Like
Right.
you're gonna see this tomorrow.
Mm-hmm.
So it's going to reveal if it's a potential leading stock.
Right.
And I mean, this is really constructive, the way that it's the way that it's built this base, and now it's moved up. You've got the volume signature, and it's not that extended. It just broke out at 16. See right here, 1592, and this is now you had this lousy close right there. See where it moved up and closed at the low of the range right there.
Yeah.
And then in fact, that's worrisome. That's a little bit worrisome, but it doesn't have far to go. And so, to take out that high. So say I understood the fundamental story here and I wanted to take a position, I would watch this stock tomorrow to see if it bounces off the 21 day. And let's just say the market's flat. And, again, this isn't very extended. I'd put it on a little bit, right there at the 21 day to see if it holds. And then if it turns, I'd add a little bit more. Then if it takes out today's high, I'd add a little bit more. And then taking that pivot out, I'd add a little bit more. Say you do that if you wanted to have either a 5 or 10% position, do something like that incrementally, and don't add unless don't add at those subsequent levels unless you're green. Don't make a deliberate, intentional action plan where you buy. You don't buy the next position unless you're profitable. But when you are, just buy them, just keep buying it's going in your direction, and press the position. That's the most effective way that I've learned to manage the positions that have made me the most money over the years.
Right. Sure. And
Can
Roy,
you put
if you
HIMS,
have started so far,
HIMS?
Yeah, what's that?
HIMS,
UPST.
HIMS?
Have you looked at UPST?
Yeah, did you say VST?
No, UPST, Upstart.
Oh, okay, Upstart. Okay, this is interesting, just like a firm. So now, so guys, look, I told you, we pointed out a number of these stocks that took out that opening range low. Okay, so look, so this did it too. So I'm just pointing this out, but Snowflake, ESTC, this stock right here, Upstart actually took it out, and then you had this move right here on from that 10-day moving average, and then it came into the 21 day. See that 1 day to the 21 day, and I remember, and it was down 14% this day, right there, and that's the kind of stuff that just raised the hair on the back of my neck. Like, okay, and I owned it, by the way. We bought it and sold it. I bought it and sold it that day, right there. And because this, you had this big break in it, and then it came back, and I personally reevaluated it and said, man, this isn't the kind of base that I want to be involved in. And then you had the big break, and I was happy I avoided this 14% move. 14.47% move. And no, it's not necessarily over, but you did have an outside day to the downside. So that makes me a little bit suspicious as well. There's a number of things that make me suspicious, but when you have a stock like this with a pattern where it's somewhat erratic, if it sets up, and if you reverse this reversal and take that out, it's going to more than likely work taking out 80. So now, so I didn't like it, and I sold it, after about, 5 to 7 days. But if it builds this right side, then it could potentially go. But you had some negative news, like with the firm that as well. You had some negative news where I think it was with the credit card companies where they were floating the idea they're going to cut rates. And if they cut if it's mandatory that they cut their rates from 20% to 10%, then people like this, they're going to have to cut their fees as well. So that's what's going on behind the scenes with these companies. And, so both a firm that had a good response to the earnings report, both Affirm and Upstart, they've been thrown into that category. So just keep that in mind. There's nothing wrong here. There's nothing wrong here with this, with the chart. The earnings were good. But again, if it comes into the 21-day and builds a base, this might resume its leadership. But you just need you just need this stock to go sideways for 5 to 10 days.
Hey, Roy, have you realized this kind of new theme that some of the super performance stocks of 2021, like Affirm or Square, or you mentioned Roblox earlier, that they are kind of setting up, they all kind of broke out of stage one. Have you realized that?
Yes. Yeah, Twillo's in that group too, so there's the move with Twillo. And I mean, this is, talk about being picture perfect, guys. See, there's that, again, the volume signature. I'm always looking at that volume signature, and it never took out the day one low of the breakout. And many of these, you can buy them on day two when you go back, and the ones that work, the ones that gap up, come in a day and then take out the high. That's the ideal place to buy when you have a very powerful move that breaks out to the upside. And look at that. See, that's a move from 85 to 120 up there. So almost a 50% run. And see, it's not sustainable. And that's why we're so light right now, why we've sold into all this, because this is not sustainable. It's not sustainable. And, if you typically get a move like 20 to 25% after the breakout before the next earnings quarter, my experience has been you typically should take that. And we just saw some massive moves, moves that are very, very rare. And now this would be a sell for me if I own this particular stock right now. Not that it's over with, but it just needs to come to the 21-day and then put in a base and then go again before the next earnings report. And that's going to be predicated too on what's happening in the overall market as well.
Roy, we are entering into the most bullish seasonal period, right? From
Yes.
now until mid-January. I mean, it's very hard. What's your perspective? I mean, I'm thinking market is going to go up. There might be some sort of rotation that's entirely possible. So let's
Yeah.
say the names you're pointing out, maybe they will just consolidate sideways, but the money will go somewhere else. Do you have any idea what that somewhere else might be? Might it be value, small caps, mid caps?
No, no, I'm just, what I'm watching, I'm running screens like the markets, like, the Market Smith 250. Here's the Market Smith Market Surge 250. And these are the top ranked stocks, in that, in this screen. This is a proprietary screen by Investors Business Daily. That's comprised of like 26 different screens to make it into one. And I'm watching all this. We sold Spotify. We've sold just about everything except like maybe one or two positions. So I mean, we were 130% long, and now we're maybe 15%, 15, 18, something like that, with only 3 or 4 names, and 10% of that's in Bitcoin. But just watching these, watching Duolingo that had a great earnings report, Confluent a good earnings report. So there's that ESTC that I was interested in before. There's Coinbase. So these screens are going to populate based on relative strength, sales, margins, earnings, and so forth. So you don't know who are necessarily going to be where the money's going to flow, but they're going to hit these screens that I'm running. They're going to hit the new high list. They're going to hit the top 200 composite list. They're going so I'm constantly looking at at the screens that we run. This is the AXON. See, this is another example. See, you had the big move where, if you bought it on the Bible gap up, it followed through the next day right there, followed through the next day. And then you got the move from here to here. And it's easy to observe. You don't have to be a market pundit to notice that, well, this looks a little bit unusual over the last, 2 days. This looks unusual. So we're seeing these are little subtle hints that you can see with your own eyes that something unusual is taking place. So be alert to that. This is not normal. The last 2 days, the break here and then the gap up and it closed, weaker. So, and you've already had a big move. See, it's already doubled.
What's that again?
Biscuits and apples.
I think apples might. Yeah, just put it in there. You're fine.
William.
I don't know who that is in the background.
William Rich. Can you
Roy,
Richie? Yeah.
Roy, I was wondering, have you tried DeepView and what do you any comparison with Market Search?
I have not. Yeah, I have not. I know. I think he gets really positive remarks. I think it gets. I haven't used it though. I have what I've used and what I've used this for decades. Daily graphs and Market Surge, and I'm comfortable with using it and so forth. But I hear good things about DeepView anyway.
I have one question. Generally this period we consider a strong period, but last 2 days we're seeing, the many stock on the screen that there's a lot of selling. Does it give you some kind of a hint that market gonna be choppy or the some sallies ahead?
I think you got to be prepared for it, and you have to, you've got to, you got to prepare for it. You got to make sure your position size is not at a level that you can get, hammered. But it could pass, because of because of the very bullish factors that I talked about earlier. We're bullish. I mean, we're bullish over the next, 3 months, but we're like right here at an inflection point where you're seeing some rotation, you're seeing some leading stocks sell off, and it may pass quickly. But our antenna is alerted.
Yeah, I mean, I grabbed the wrong cable, so I never used it. She's coming right.
So, that's what that's really the emphasis of this conversation tonight is, don't give too much back. We're going to have a great opportunity on a pullback. I hope we roll over here just so we can put more money to work. But, this can give you an opportunity of who's holding up the best. Those are going to be your next leaders. Those are going to be the places to find and place your money on those positions that aren't giving up that much. You don't want the tighter the tighter that the range is, the better, and the closer that it remains to its all-time high, the better as well.
So can you put HIMS, HIMS?
Who's that?
HIMS, HIMS.
Hims and hers. Hims and hers. HIMS.
This is in that GLP-1 area that are competing with Novo Nordisk and Lilly, and I'm worried about the stock's okay. But I am worried about them being sued by Lilly and Norvo. I don't know what the political situation is going to be. I don't know what's going to happen there. I saw Biden the other day, was talking about these drugs from Ozempic and Moderna being paid 100% by Medicare. I don't know if I don't know how that's going to impact this company or not. I just don't know. But it's the stock's holding up. Stock's holding up right here. So it's you can't argue with the stock being in new high territory. So I'm not exactly sure. I'm not exactly sure if I want to participate or not, but you've got great revenue numbers there, and they are profitable. It definitely should be considered.
Hey Roy, what's your take on Ollie's bargain earnings breakout today?
I don't know why. I don't know why it responded so good. I just don't know. Revenues were down from 578 million to 500 million, and the earnings were fine. I suppose I don't know if they beat the estimate or what. I don't know what created that, but the numbers aren't explosive, but it did have a good response. It had a really good response to the quarter, and Costco I think is coming Thursday, so that's going to be interesting as well. So, my take is any kind of any company that has a breakout like this on volume, on the earnings coming out of a base, that should get your attention to do some homework. And many times you only have one day. We're of course on this call tonight, but this came out today. So, if I didn't have the meeting tonight, I would know whether or not I would buy this stock tomorrow or not. Taking out today's high, I'm just not, I'm not exactly sure, and I'm somewhat concerned about the short-term movement in the market. So good action right there. I don't know why it had a great response, but again, the report doesn't matter, guys. As you know, it's the response to the report that's important.
Was it retail? Because I think all retail is doing well. I mean, if you look at XRT or
yeah. See, this looks this is very favorable, and those retail in the industry in EORT. I don't have that. I'd have to pull up the list of exactly, but it's can be Walmart, Costco, and all these companies.
Yeah, if you look at Gap.
Yeah, Gap.
Ross Stores, ROST. Yeah, those are all going right now. Yeah.
It's definitely a strong area. This is sort of long in the tooth right here for Walmart. I wouldn't be surprised. I was trying to get my hands around this. You had that day yesterday. Again, this is what we saw across the board. So you have to you just have to pay attention. But that's what got my attention yesterday was that day. That's that day from a 52-week high, on volume, and the turn down. So, I mean, again, it's the 21 days 90 right there. So, all these stocks should come in now. They should come in, and then you can, take a look at them to decide, are the bases faulty, or are they setting up again to be, to buy again? Guys, I'll take a couple more questions and then I'm going to call it a night.
Yeah, Roy, sorry. I've come really late. So did you talk about why you are so still liking the Bitcoin?
Yeah. We hadn't touched on Bitcoin. Now I did de-risk and sold some Bitcoin in the last 2 days as well. And I didn't like the way that this is when it broke out at 104,000 and they sold right into it right there. Now, this is, if you want to, if you would like to know my number one idea in the next 12 months, it's this position. It's IBIT. But we had a lot of it. And so if this market sells off, if this market sells off, it can easily, come here back to 50. And again, the strongest stock, see where it's come in only 3 days. Now this, and we're gonna get we should get it. We should get an idea tomorrow, at 8:30 with the CPI if that's going to be, if it's a good number or not. But you've got the PPI the next day as well that you're going to have to contend with. But we've de-risked here, but holding the 10-day, not even getting to the 21-day, taking out today's high. That would be, I would get more, I'd feel better about it. And this, nevertheless, it is still, there's no question in my mind, this thing is going to be $100 in the next probably 6 months. But it's a matter of getting in. And I had, thousands and thousands of shares of this thing. So, I just de-risked just because, kind of where we are. But this would be something that I could easily get back on and raised my exposure from 10% to 20% on the turn, but I didn't want the overnight risk. And I sort of feel like that if the market rose over here on those leading stocks, and this has been a leading quote position, a leading stock, that they'll get this one as well. But if it just comes down to the 21 day, if it comes down to the 21 day and then turns, then you'll have a better entry point. This would be the number one position that I would be paying attention to, like in the next couple of days.
Roy, what is your confidence based on? I mean, do you think Bitcoin has any value?
The market thinks so, and I'm following the institutional money, so it doesn't matter. I mean, and the quick answer, and we'll end this conversation on this, guys. Bitcoin. The sound bites. It's immutable. It's decentralized. It's digital gold. It's a peer. It's a peer processing entity. Yada yada yada. But the fact of the matter, and it's got scarcity value, 21 million Bitcoin. But the fact of the matter is, I'm following the institutional money, and over the last year, we had a very negative SEC chairman, Gensler, and he did everything possible to block the innovation that's taking place in the blockchain area. So the Supreme Court ruled that they couldn't stop it, and so no government is going to be able to stop it. And regardless of there's no way I'll know what it's worth. But this is, it's cryptology. It's a new technology, and all I know is the two smartest hedge fund managers in the world, Paul Tudor Jones and Stanley Druckenmiller, these are old farts. They've been around. They've seen everything. They've made all the mistakes, and they had all the successes as well. And they're high on it. And you've got a cabinet with 21 people in Trump's cabinet that I've seen so far that are worth $1 billion, and they all have Bitcoin exposure. And then you have people like BlackRock and Fidelity that have, the ETFs have made Bitcoin easily accessible. So because of all those factors, you have no idea when, MicroStrategy, you didn't know that it was going to go from 100 to 500. We sort of thought that it would, but the prices, Michael Saylor, he thinks Bitcoin is going to be worth $13 million of Bitcoin in 25 years. And, Kathy Woods is on record, and, I would question her judgment, but, she's on record that her base case is Bitcoin will be worth $3.5 million in 5 years. And so we don't know what it's worth. It's only worth what you're willing to pay for it, but it's a new asset class, and it's been, Wall Street they are embracing it. This is in its infancy right here, and it's just getting started. And I certainly think Bitcoin is going to go from 100,000 to 250,000 in the next 12 months. So it remains, Wes and it's our top idea. And it took me a while to get on board, but I know how to follow the institutional money, and that's what we're doing. So we're following the institutional money. We sold a 10% position in it today because we're somewhat concerned about the market. Even if I think it's going to be worth 150% 12 months from now, it doesn't mean that I can't manage the downside. The downside risk. So that's you don't have to believe in it. You don't have to you don't have to know everything about it. But the way the markets work, if you follow the money and follow the people that are moving with the money, that can lead to great success if if you're able to visualize that and see it with your own eyes. And that's money. This is money that's coming into the asset class since the election. And this is just getting started. This is not over in 30 days, guys. This is going to be a 5-year move. And you're going to go back. I've seen these moves before. You're going to go back in time and see that, 50 and 50, and next thing you know, it's going to be 200, 150, 200. And as sure as I'm sitting here, a year from now, but a lot can happen. You can get bucked off the Bronco. If your position size is too large.
Yeah.
So
Right.
guys, with that, I'm gonna call it a night, guys. Thank you for attending. Follow us on Twitter. We put a lot of our comments there. We hope you find that useful. Wes will get out. He'll come out with the broadcast tomorrow and the slide deck. You'll be able to get that. And be careful here, but be aggressive and take advantage of the opportunities. I'm certainly sure that you've had a great year, because we've just been guiding you along the way. So we hope that that's been useful to you, and we wish you great success moving forward and happy holidays. So thanks for attending, and we'll see you next month, 30 days from now.
Thanks, Roy.
Thank you so much, Roy. Thank you.
Thank you, Roy.
Thanks, Roy.
Welcome.
Yeah, thanks, man. I really appreciate it.
Our pleasure.
Thank you.
And happy holidays and Merry Christmas in advance, Roy.
Thank you. Appreciate it.
Thank you. Bye.
Thank you, Roy. Thank you, Wes. Good night. Thanks, guys.
Thank you.
You're welcome.
How can I get the recording or the deck?
If you're on our email list, you will automatically get it.
Okay. Thank you.
You're welcome.